Okay, very good morning to everyone. Monday the 22nd of May. Hope you all had a fantastic weekend. Quick recap then of some of the overnight news and a look at the charts this morning and really the week ahead, just to see where the real kind of periods of potential volatility could come in the kind of 5 trading days ahead. And looking at the charts this morning, things, I'd say, relatively neutral. There's a couple of news stories that definitely you'd want to be paying interest to, particularly for sterling. Right on point. We're just hitting fresh session lows now, just retesting the initial Asia Pac overnight low that was seen down at 129.83. So S1 just coming into play now for cable, and well, let's get straight into sterling then, with that in focus here this morning. And that's because there's been a couple of developments from weekend news over the weekend. And it comes amid, if we look slightly longer dated, I guess, with cable, some quite key areas that we've been trading. Obviously, last week was notable for the reason that we had that really strong retail sales report, which managed to catapult us above that key technical level of 130. We eventually touched up highs at 130.59 before pulling back, and then we've kind of had a fairly volatile price movement around that point, but just pulling back sub 130 this morning. And there are certainly a few things that have developed from a fundamental point of view that would probably make you more err on the side of having a bias on the short at this point around these levels. First off, you've had update on the Brexit talk situation. Everybody's favourite, David Davis, never fails to disappoint. He has basically been speaking on the Sunday Times. He said, well, the outline here is European Union ministers in Brussels. They're meeting today to refine their Brexit negotiating position after the UK threatened to quit talks on its departure unless the bloc drops its demands for a divorce bill, which is as high as 100 billion euros. Remember that number that was being touted on the European side? It started off at being around 60. Actually, now it's up at around 100. So what's happened is that Britain's negotiations would otherwise be plunged into chaos. Brexit Secretary David Davis has said in an interview with the Sunday Times, he went as far as saying even £1 billion settlement would be a lot of money. So if you were talking about negotiating posts at the moment and making your mark in the sand to get these talks underway, you've got Europe at 100 billion, you've got David Davis at 1 billion. You know, couldn't be any further extreme in terms of what their views are at the moment. And obviously it's the settlement of this amount of money to Europe that they feel that the UK has already had the benefit of, and therefore it's a bill that they need to pay. That needs to be dealt with first before then actual trade talks or transitional talks can commence. So this is kind of the real key point of where these negotiations are on a timeline at the moment. So it's going to be centered around the compromise on that figure that's going to be key. And I think David Davis' comments are a little extreme on how aggressive he's being, which may just add some negative sentiment as towards getting these Brexit talks more fully underway, particularly in the context of European ministers meeting today in Brussels. The other thing that's developed over the weekend was most interesting on Sunday. You've had the latest polls post all of the manifestos that have come out last week. Now, if you remember, Labour were kind of first out, and they were received very positively, particularly I guess with this ongoing momentum that they've got online with the younger generation at present. The Lib Dems kind of came and went without much headline coverage, and then the Conservative manifesto basically has been a big disappointment all round, particularly for the elder catchment, of which is their kind of staple, if you like. And so what was very interesting on Sundays was that you got the first polls that encapsulated all of the surveys conducted after the Tory manifesto. It's the first time you could see then the difference that this has made. And essentially The lead, of which was as much as 20 points, has now narrowed to as tight as 9 on the YouGov Sunday Times voting intentions for Westminster. So it's got as close as it's been, well, ever since the snap election's been called. If you're looking at other polls that came out, this is the Telegraph ORB poll, this telling a similar story. Conservatives unchanged, but Labour up plus another 2, so now up to 34, so slightly wider, but this probably graph is the more telling. And what you've got here are a couple of lines marked in the sand. You've got the EU referendum itself, obviously last summer. Then you've got when the election was called, and really what's been very interesting here has been the performance of the parties thereafter that point. If you look at the Conservatives, you know, there's a really strong reaction when she took that proactive move to call the snap election, to encapsulate on this situation of having quite a large majority at this point. In terms of what the polls were indicating, it's shot higher, but really hasn't done a great deal since that point. The other parties have all suffered. UKIP dramatically, but likewise Lib Dems have really failed to cultivate that alternate vote, which some were speculating at the time in which the snap election was called, that they could have been the credible alternative. Certainly that's how Tim Farron has been positioning himself to a lack of success. What's been the most surprising is look at Labour. You know, at this point when the snap election was called, this is when really Labour was in a bit of disarray, particularly under the leadership of Jeremy Corbyn. But what's happened here is a phenomenal rise in their popularity from what really has only been about 2 months. And so what I'm suggesting here is that the more that these two lines converge, which I would expect to be the case as we get closer to the 8th of June, so over the next 2 weeks, the more negative read across that will have for the sterling currency. This in combination with any developments on the Brexit talks, of which then start to err on the side of quite aggressive, like David Davis stating that the UK will quit talks on leaving the EU unless the bloc drop its demand. If he continues to pursue that type of line, in addition to these polls getting closer, I would say that I feel more comfortable, fundamentally at least, that 130.59 high that we had on retail sales last week may well define the top side for the time being. Obviously, things could happen to the dollar, which could negate that move, but the sterling negatives seem to be growing at this point, and I see the polls only converging further from here forward. Looking at cable then, if we do continue to tick lower here, you've got the low that was seen back on the 16th. That comes in at 129.71, so we're only around 10 pips off that in the futures at the moment. Just below there as well, you've got the high on the 3rd. That was seen in around the 65 mark. So 71.65, there's a couple of areas that are probably worth just keeping an eye on. Then you've got that 129 handle, which we pretty much touched to the tick on that initial pullback post the retail sales number. Remember, everyone started to kind of be a little bit fearful then of what that meant for the pressure on household incomes, about the inflationary aspect, before we then recovered. So cable's going to be an interesting one this week. A lot of data came out last week. Now it's more about the polls as we get closer into the run-in to the general election. Elsewhere this morning, the dollar is a touch firmer. Don't forget it was under considerable selling pressure really last week, only to kind of recover later on the back of the kind of emphasis on Trump and the uncertainty on his position as leader. Slightly dissipated as a lot of the senior GOP members stood behind Trump and continued to back him despite this growing calls for potential impeachment over the relationship with Russia. So looking at euro dollar this morning, as the dollar creeps back higher, we've just broken back below that high point that we had towards the end of last week. That would have been Thursday's high in euro dollar, was at that 111.88. We're just below there at the moment. Obviously Trump has been active over the weekend. He's been on a trip in the Middle East, in particular Saudi Arabia, and I guess this is just the new norm, and hence the reason why the market is fairly sanguine about the reaction to it. Trump basically doing a complete U-turn on how he defined the Islamic State and Saudi Arabia and the Middle East. So Donald Trump has launched a fierce attack on Iran just a day after the country re-elected its moderate president on a platform of re-engagement with the outside world. So speaking to Muslim leaders in Saudi Arabia, Trump signaled out Iran basically for fueling the problems. And the policy U-turn that he'd done is he dropped some of the quite aggressive wording around the Islamic State. And so, again, I don't think the market's really looking at this too much. If anything, actually, maybe there's a sense of relief that he hasn't done anything worse. Obviously, the relationship with Saudi Arabia, why would he change his tune? Well, they've just signed military sales deals worth 110 billion euros with Saudi Arabia. Other investments, it could total as much as 350 billion over the next decade. You then throw in a further 40 billion that the Saudis are going to put into infrastructure building into the US as well. Hence the reason all of a sudden the kind of rhetoric gets softened, so to speak. But Trump's definitely going to be something that isn't going to go away anytime soon. And now that he's done his first kind of foreign visit since taking over the Oval Office, he's going to be in Israel today, he's going to be in the Vatican Tuesday, he's then attending a NATO summit on Thursday, and don't forget that was one of his other big U-turns, now being more favourable of NATO after saying that he wanted to basically pull out of it originally. And then you've got the G7 summit, that's on Friday. So certainly commentary out of Trump is definitely still to be watched. And on the situation of Comey, a name that's worth just getting familiar with, Jason Chaffetz, the chairman of the House Oversight Committee, is scheduled to speak with the former FBI Director James Comey today. So any sources or leaks or anything that comes out of that conversation, certainly of a negative light, could have some impact on the dollar. So something to keep an eye on. Comey is now also due to testify before the Senate sometime after the US Memorial Day holiday on May 29th. So we'll have to wait a little longer before we get the more concrete details on that side of things. Okay, moving on. Let's have a look at oil prices. This was the main headline over the weekend, and this of course is important because this week on Thursday we have the official formal OPEC meeting in Vienna, which is their HQ, and Saudis see all on board to extend oil cuts for 9 months. So let's just have a quick look at oil, because really this 9 months is the key here, because it was only about a week ago suggested that 6 months was going to be the extension. So the kind of escalation, if you like, on how much further they're intending to go is by a timeline. So an additional 3 months on top of taking it to March 2018 is seen enough for the oil market at this point to continue to be bid into the event. My feelings here are that, you know, we got close to a $51 handle overnight. Certainly here you can see 50.71, which is pretty much exactly where we trade at the moment. That was that previous support point back on really the beginning of the year, 10th, 11th of January, before eventually breaking back on the 8th of March. So this level is quite interesting. But overall, I do think that given how far that we've risen in such a short period of time on this kind of verbal commitment that we've had from OPEC I mean, we've risen percentage-wise over 15%. I can't help but feel we might get a little bit of buy the rumor, sell the fact type price action after the event actually happens. For the newer traders, generally speaking, the OPEC meeting really is defunct because we already know what they're going to do. They've already told us they're going to extend by 9 months. So I'd still be monitoring source comments. They tend to pick up. The meeting's on Thursday, so by Wednesday, I'd say be a little bit wary of headline sources hitting the tape. Could add some volatility to the price movement. But at this point, the market's priced in the fact that 9 months is going to occur. The question is then, once that does occur and they implement it, then what happens? Because for any of those that were still looking at the news on Friday evening, you did have the Baker Hughes US rig count. So this was quite interesting last week because US output actually fell on percentage terms. It was a very, very small amount, but it was the first time in a long time that I can remember the US output or US production on a week-to-week percentage basis actually was negative. But what the stats are saying is that while much was made of that fact, it was driven though by the Alaskan supply drop and not actually the lower 48, whose production is at August 2015 highs. So actually for North America, as in the USA, US rig counts were up again, +8 to 720. This is the 18th week in a row now that US oil rig counts have risen. So to think then that US production all of a sudden is going to start tailing off, I think is definitely not the case. You can see here in this graph the lower 48 crude production rate and the US oil rig count on a 3-month lead. You know, these are tracking each other fairly tightly in terms of the trajectory that they're moving to the upside. And so hence the reason why I still think that, okay, the market's bought into this idea, we're going to get an extension, it goes above and beyond what was agreed back on the 30th of November 2016, we price higher, but then ultimately it gets done, and then this US output doesn't change, they're still getting pressured by the shale industry, and as we've discussed before, the implementation over the long term gets increasingly more difficult. The longer that these cuts try to be maintained, and will ultimately need to be backstopped by the likes of Saudi Arabia, which we've seen before, where non-OPEC nations are certainly not cutting to meet their quotas to the same point where Saudi are going over and above, if you like. So something to monitor certainly. It's going to pick up a little bit towards midweek on the news side. But then the performance between, I think, the first half and second half of the week might be telling as far as crude oil is concerned. Another headline from the weekend, just so you're aware, North Korea confirmed it successfully launched another medium-range ballistic missile on Sunday. Really, absolutely no real reaction seen in the broader asset classes overnight in the Asia-Pac session. And so this is kind of now being factored into market prices. The fact that North Korea, this is a regular pattern. I think the statistic is in the last 3 years they fired more test missiles than they have in the last 3 decades. So this is now the new norm. So unless these missiles, I guess, start in terms of where they fall into more hotly contested waters, maybe in the East China Sea, then at this point these continue to happen with little ramification in terms of the broader market sentiment. So the geopolitical fallout from this is now starting to get more contained. Okay, quickly just looking in other asset classes. In terms of equities this morning, US equities obviously pretty interesting week we had last week when we broke down really that Washington Times, New York Post. This was when we had that really big day of selling pressure, when people were saying, you know, is this now the point where we're going to get a bit of a mild correction, given the fact that we'd touched fresh record highs once again, overvalued by more than several different measures. But then we had a big recovery in prices, and a lot of this might be down to the fact that oil has managed to put in such a strong performance more recently. Since that 44 low, we've rallied 15% in crude, and certainly I think that that lends its hand to helping equities recover for the time being. So if we did get that buy the rumour, sell the fact in oil, and oil started to come under pressure again, and certainly that could be quite interesting to see how, if equities still have the appetite to remain up at these elevated levels. But you can see we've come back to really that 23.79 again, which was obviously quite a big level that we were watching last week. You can see it's still marked up here from that previous support, and when we broke that, really it was quite quickly that the momentum picked up, and we're pretty much back to that point again at the moment. So certainly with Trump on these kind of international tour at the moment, he seems to be fairly tight-script, and any aggressiveness in pushing a protectionist view seems to have fallen to the backseat quite quickly in pursuit of trying to keep this dream alive of the Trump trade. It seems Trump's now is more concerned about signing deals and getting relationships made in order to boost investment into the US at this point. So any of those policy pledges that you heard pre-election campaigning, I think are just completely gone and forgotten. I would just totally forget everything that Trump told you before the election and any promises he had made, because they're redundant. Now what I would be expecting him to do is be fairly level-handed, I think, in the conversations that he has with likes of Israel and in the G7 summit at the end of the week. The only thing I think that could come up that would be a negative in the next 5 days would be more colour coming to light about these FBI investigations. That's where the negativity lies for him in the short term. Quick look at the calendar then for today. Today is an exceptionally quiet day in terms of scheduled economic data, I'm afraid. You've got Chicago Fed National Activity Index this afternoon at 1:30, but then otherwise it's a fairly light day. Kashkari, one of the most dovish members of the Fed, is speaking later. Obviously you remember James Bullard spoke at the end of last week. Although he sees very little interest rate movement over the next 2-year horizon, in fact he's only forecasting one hike over the next 2 years. His comments were that he said the Fed's contemplated policy rate path is overly aggressive compared to actual incoming data. So obviously he's referencing the fact that US economic data has softened slightly from where we were just a couple of weeks ago. It'll be interesting to hear what Kashkari has to say, but one word of warning, he is an uber dove if you like, and so something similar to Bullard would be unsurprising if he sounds particularly dovish. But looking at the week as a whole, just quickly, I did send this out to you guys this morning in the research. So Tuesday, we're looking at the various service manufacturing PMIs from across the Eurozone, and we'll get likewise in the US and some housing data in Richmond Fed manufacturing. Then on Wednesday, you have the Canadian interest rate decision. So for any of the live guys trading in FX, in trading live, that's certainly always an interesting one because they release their policy statement alongside the actual rate announcement. A couple of ECB speakers as well you've got there. In particular is ECB's Draghi on Wednesday. And then on Thursday, you've got a French and German bank holiday, so it could be a little bit lower on the volume side. You've got the second estimate of first quarter growth in the UK, and then you've got the OPEC meeting, the agenda of which will probably be published on that morning, but I can tell you now you'll probably know the outcome of what they're going to do on Thursday, definitely by Wednesday afternoon when all the sources would have been leaked by that point. And then rounding off the week on Friday, you've got US GDP, PCE, durable goods orders, Michigan, and Baker Hughes rig count. So fairly quiet today, and then it starts to liven up from tomorrow. And then you've got the Trump trips, if you like, throughout the week, And then in addition, I'd be keeping an eye on any latest UK election polling. The tightest or narrowest spread at the moment is the YouGov poll, which is 9 points. The more that converged, the more pressure that's ultimately going to create for sterling, I'd say, as a headwind. Okay, guys, coming up to 9 o'clock then. It's your morning briefing. Any questions, though, please feel free to pop them into the chat. Happy to help otherwise, and have a good session. Thank you very much.